Welcome to the dark side.
What's up, guys? Welcome to part 3. We're going to be getting into Decrypton theory. This is where you're going to learn basically everything you need to know about the actual strategy of shorting using the Decrypton theory. First thing we're going to look at is supply zones, which are areas of resistance created by past price action and volume. And warning, guys, it's never the same every time. So what I show you here and what you start learning and seeing as you're looking at this every day, the pattern is never going to be the exact same. It's going to mirror, in a sense, the same idea and same philosophy and theory about why these things work, but it's never the same. And another thing, a lot of times when you're drawing something, it's basically in the eye of the beholder, okay? Everyone's going to draw it a little bit differently, so it's never the exact same. I'm going to show you how to theoretically draw these areas and give you an idea of what areas to look for, which are basically going to be high probability reversal zones to potentially get short. Not only get short, also if you're long, understand that these are areas where people are probably going to start selling and locking in profits and get short. So maybe you should be getting out of your long positions at these zones. First of all, let's just take a look at the types. One, there's the single reversal candle. And a lot of times, whatever these supply zones that we're going to be calling, some people call them order blocks. I just call them supply zones because they're reversal candles. The other one is the cluster of price action plus reversal candles. Okay, so the single order one is this, where it's just a single reversal candle, typically with a smaller body and an upper and lower extended wick. The cluster is going to be where you're going to have multiple times of this happening, and then maybe even another one over here in a range where you just have a continuous sideways price action, and that creates a cluster of a lot of price action, and that creates a heavier and higher probability zone of support or resistance or supply and demand. The other one is the same day opening and closing price, which would be this example here. So if there was a bullish candle that closed up here, but the same exact day it closed here and then opened and then dropped to the next level, and that was the top of a trend, and then reversing there, okay? And then you have this reversal candle that looks like this. So just an example, say if we had a trend that was bullish, it reversed and then started dropping down. It had a little bit of a bull flag or bearish flag here, and then had a single candle reversal candle. Now that would be a potential supply zone when things dip that things go up into. Say we had another area of, a single candle reversal and same opening and closing day price action. This is gonna be another supply zone, maybe a little bit heavier because we have multiple reversal candles in here or order blocks that are happening in here. And so that's going to be a little bit wider range because it's not just a single candle, maybe multiple candles forming up, almost a cluster. And then we have other ones that could be potentially happening down here. Now, what this gives us going forward after we see a massive drop, typically what we're going to see now, if you've watched the Krypton course, which I'm sure you have if you're in this course, is we're going to see a revival pattern form up here, where then price action coming in forms up a reversal triangle pattern and then breaks out to the upside. And now that we have this revival pattern breakout in play, we could have potentially longed this and made money, but now, if we're long, we need to look for areas to take our profits in. So when you see me sending out these alerts for buy alerts, and you're seeing where I put my, 4 or 5 profit targets, where am I putting them? I'm putting them at supply zones because I know these are areas where people are probably going to start selling. It doesn't mean that I'm always looking to short these, but these are areas, yes, if I am looking to short, I'm going to get short, and I'm also looking to lock in profits. So what we're going to be looking at is these as potential areas to either short if we're not long these positions and we're first getting in on a short, and then we're going to maybe get short up here and potentially try to trade the reversal, or short up here and try to trade the reversal. Now, the difficult thing is when we're looking at this is, what if there are 3 decent areas of resistance here? How do we know which one to pick? The problem is we don't really know which one to pick. And typically, if you have a short position that you're watching, if there's a supply zone here, but there's also one slightly above it up here, the likelihood of you trying to get in here, especially you're probably going to FOMO in at the lower range, and then it's going to spike up to this one, and then you're maybe going to stop out, and then it's finally going to break out to this one, and that's going to be the one where the actual dump comes and actually reverses. So typically, if you have multiple supply zones that are relatively close to each other, you're definitely going to want to have a little bit more patience to go to the one at the higher range. That's typically, in my experience, you always FOMO into the first one, and it's always not where things top out and things continue ripping. And then another thing that we're going to talk about after this is if there's a whole number in conjunction with that. So that's kind of the breakdown of what that looks like. Another thing I want you guys to understand is if things are going parabolic and it's blue skies, meaning it's at all-time highs, ATH, this means that what? There's no previous data here. There's no supply zones telling us that, okay, this is the top, this is the top, this is the top. No, because there's no data. This is what we call all-time highs or blue skies ahead. And when you're trying to short this, it's just idiotic. You're going to continually try to guess this is the top, and it's going to continue squeezing you until a lot of times you might try to short 1, 2, 3, 4, 5 times before that actual reversal comes. And by the time it actually reverses, you've lost so much money trying to guess when that top is. You don't even get in up here because you already lost all your money trying to pick this top up here. It always goes higher than you expect, and it's extremely difficult to time. And so looking at just other ones here going forward is just looking at clusters of supply and demand. Again, like I said before, this is when you see multiple reversal or these similar candle patterns that I'm going to show you on Bitcoin happening over and over again in the similar horizontal range. And when you see that, that's a much more higher probability zone where things are going to bounce potentially, but it might come in and bounce again in these zones multiple times because we've seen it happen multiple times in there. And it might actually create another cluster somewhere over here later in price action. And then we might have a lower one right here. And then we're trading the revival pattern that breaks out. Now we're looking to get short potentially on one of these, right? Which supply zone is a higher probability? The one that's right here, but what if there's also another higher probability zone with a bigger cluster of supply and demand up here? That's probably going to be the higher probability where it actually reverses, where it might come down here, slow down a little bit, maybe have a little dip, and then rip into the next level of supply, where that would be a primary better area and a higher probability area of shorting. And so this is just kind of a breakdown of when we look at, how to draw supply, and we're looking at potential entries and how the risk is, which we're going to get into this later. So when you're looking at these risk zones of a potential reversal, say if there was, potentially revival per se coming up into this zone, we're looking for that supply zone to get short. This would be the highest risk to get in because you're at the lower range of the extended candle. The base range is here. And this is typically where you're going to want to maybe get a first starter position. And when you're getting short, you're never going to get short just one position. You need to be entering like 1 to 5 different times short with a stop loss above, because you never know how high it's going to go. You're never going to make the perfect entry, and it's very difficult to pick the top. So the upper range is going to be the upper end of the candle. This is going to be an even higher probability trade. And then there's the actual fuck zone where it's broken out above that previous high here, and you're like, shit, is this thing going to rip and just go to another supply zone? But a lot of times things break out over that high and then turn into a bull trap where the bulls think this is their big breakout and they're going to make a bunch of money. And then it quickly reverses off that and then just comes down and dumps. So that's why usually your first entry is always the wrong one. Then it starts spiking up, spiking up, spiking up. And then the reversal comes a lot of times spiking over that high, faking everybody out, and then getting down into that actual reversal that you were going for. So let's just take a look at Bitcoin, which is absolutely getting demolished, that we'll talk about later. Let's just take a look at some things here. Okay. First of all, there was this kind of cluster of price action here. Okay. And we can't really have a definitive area of how we're going to draw this, right? Going forward. When we see this, we're like, I don't fucking know. This is kind of all over the place, but we can see this sideways price action with a high here, high up here, low here, high here, low down here at the closing price. And we'll see how that becomes significant later on. Then there's also this reversal candle, but this was also on all-time highs at the time. So trying to short this is just stupid, right? There's also a reversal candle here. Here's a reversal candle. And yes, it did come back down right into the 9, 13, and 20 EMA, bouncing off the 50, then ripping up just right over that level. But we'll see that this becomes relevant later in price action, okay? Then we can continue moving on. And you can see this was Bitcoin breaking all-time highs. So there's no previous resistance telling it that it cannot go higher. Here's a reversal candle. No, not the top. 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 Reversal candle, not the top. Finally, what is it? It's a closing and opening price of the same day, reversal candle. So now this has become a significant supply zone here for price action going forward. Okay, but this is why you don't want to try to pick the top of an all-time parabolic, because you don't know. Same thing down here. Parabolic, you don't know when it's going to actually hit the top. So that's why I look for, revivals, things that have massive sell-offs, revival, and then we have a lot of significant areas of supply zone to short into, but we want to see a quick ramp up in price action here into a supply zone. We want to see parabolic into supply for us to find that reversal zone. So these are now significant areas for us to draw. We can go forward. Obviously, this is in hindsight per se, but now going forward, we can see where some areas they're going to give us in the future to potentially watch out for Bitcoin reversals, right? So drawing this across here, now we can see that this is now a similar cluster, right? What is this? Same opening closing price. And then where did Bitcoin previously top out over here as well? In that range. It's never perfect. And also here's another reversal candle right here. We can draw the closing of the red candle with the high in the range, right? And we can continue just drawing this over. Here we go. Another reversal candle down here. We can also continue drawing this over. Here's another reversal candle here, right? And we can also, if we want, extend these ranges down to the lower bodies of the candle, and that's going to actually be more significant because that is price action and data right there. I'm just giving you the base range. Remember what I said? What are the ranges here? Right? The body is the base, upper range, lower range, then the off-fuck zone, which is slightly over the top of the reversal side of the candle. So going forward on Bitcoin, remember this cluster here. Where did everything bottom out? In the same exact cluster. Also significant, 30,000, which is what we're going to talk about next. The importance of whole numbers here going forward, because whole numbers are definitely vastly great psychological levels of supply and demand. So this basically stopped right here at 29,000. Basically, the low was 29.3, 28.7, 29,000. So right in that 30K range, that significant whole number is where things, stopped out. Remember this reversal zone up here? We draw this over. Look exactly where this became an area of significant resistance right here. Also significant resistance right here before breaking out above that. But we can see when we draw these areas, which is very simple based on these kind of reversal candles and also clusters of these kind of candles, it gives you a much clearer picture of where Bitcoin and Ethereum, because these things lead the market, where they're going to see reversal zones and potential. But as you can see, it's not perfect. We kind of we have all these multiple levels of where is going to be the most significant area, right? Which is why it makes it difficult. The next very significant zone was 50K here on Bitcoin. So we had the reversal here. If we draw this over, look at where this topped out, okay? Right there above 50K. Now we have this reversal candle. Now there's this reversal candle here. So another significant zone. Now we have a cluster. We can also see, where did Bitcoin stop out right here? Right around 50,000, reversal clusters right here, order blocks, and then did break out above that, faked everyone out in a bull trap. But that top, as we can see, if we actually extend this to the upper range of that reversal candle there, that's basically exactly where Bitcoin reversed off that and then had a massive dump before ripping to the upside. And then when we go closer, we can actually extend this over, which is now a supply zone. And we can see Bitcoin made multiple attempts to break out over this zone. That's a bull trap. Bull trap is basically when you see a breakout over the high of a previous zone and then absolutely fail. It looked like this was okay, the top. As I tweeted here on Bitcoin, I said the average pullback of the last 9 dips on Bitcoin since November 20th is 27%, which would suggest an average pullback to 48,600. That's the data based on price action. And if we come back here, we can see I'm drawing in that zone again of those previous supply zones. And the 48.6 is basically just me taking the average of every pullback that's happened. But it's also right into a supply zone as well. Or actually now, a demand zone, because it's now coming into that zone. So this was me saying this on October 22nd, as soon as that first bull trap actually happened. And then we saw a second breakout, which then led to a secondary bull trap. Now at this point, I'm like, okay, shit's about to hit the fan. We need to start locking in profits on this. And we can see again, just coming off that area, and that area here became significant again, giving us an idea of, okay, this is now clearly a breakdown, because it also broke down the 9, 13, and 20 EMAs. This candle right here, significant. Then once the 50-day moving average broke down, we are now down to, right, I said 48.6, and that's basically where we're at. But we dropped intraday to a low of 40,000, which is what? Again, we can draw this back over, which then proved its point again in this cluster. Where did also Bitcoin drop out and stop? In that same exact cluster from that initial reversal back here, which had this significant area, this cluster here, this cluster here, this cluster here, and now it's the low of that recent candle. And we're probably going to see this continue and drop back down and retest this zone again. Okay, so this is just an idea of being able to identify these zones where it becomes more significant, where we might see reversals. And as you can see, it's never perfect. It's, spiking slightly above it, spiking down below it, spiking above it. So it's easy to have your opinion changed very quickly, because you're like, well, here's the supply zone here, but it spiked above it and then it has a strong bullish candle and then slap reversal. Okay, just like this zone right here is a supply zone. It's looking like it's going to reverse potentially right here. When we're in this zone right here, this is looking like, okay, we have a cluster here, These are our reversals. And at this point, it's like, okay, 50K, this could easily be the top here. And we just absolutely get annihilated and pull back here. But there's also this reversal candle right here, slightly above 51 to 53,000. And typically, you never see something just go right to the whole number in reverse. You see it go spike over that whole number and then reverse, and then it turns into a bull trap. And that's exactly what we saw in Bitcoin, is spike over and then just slap. Huge reversal on Bitcoin, and then it just fucking pumped. We're going to talk about soon about wedge pattern breakouts and identifying reversals when you're going short and when to potentially get back long. And we just saw this thing rip up to all-time highs again, fake out, bull trap, double on that previous supply zone, and then it just absolutely got clobbered down into the next supply zone. And it also actually stopped close to that previous range here, right? So this was the initial supply zone down here, also cluster here, and then dragged over here. That's where that first initial reversal, just barely tapping into that, coming back up, and then retesting the 9, 13, 20 EMA before just getting absolutely annihilated. And now we're fucking dumping again across the board on all of these. So that's just an idea of how to draw supply and demand. Again, you can see it's a little bit confusing because there's so many different areas, but this gives you a bit more clear picture. If you bought in on the dip here and you're seeing this massive fucking run on Bitcoin, you better be conscious that, things might be getting ready to dip, okay? And we did. We saw like a 20% fucking drop right here, and then another massive drop, and then things bottomed out at the demand and support zone and then ripped. If you're not identifying this and you're just thinking it's this blue skies ahead, there's not gonna be any fucking big potential, losses here, or if you're thinking I'm buying here, right? A bunch of people were buying up here and got absolutely annihilated. So you shouldn't be buying here when you're seeing a massive parabolic move into heavy supply zones. That's a very, very bad idea, and you're setting yourself up to get absolutely slapped, right? You should only be buying the dips into the demand zones that were clearly pictured here that you should be able to draw now that you have a little bit understanding of this. And as you watch me continually, especially when we get into the trade examples, you'll see me drawing these zones, and this just comes with practice and being able to identify these. And you're like, once you see this happening and then you go back, you're like, okay, well, that looks like a demand zone. You can see, oh, well, it did dip right into there and then reverse. This comes with practice. I know this probably looks a little bit confusing to you right now, but I promise the more and more you look at these kind of candle patterns coming in here, it's going to make a lot more sense going forward. And so that's it for understanding how to draw supply and demand. Next, we're going to talk about the whole number factor and the psychological zones to do with that.
Welcome to the dark side.
All right, guys, next we're going to talk about whole numbers and their significance. Now, we talked about the idea of actually drawing supply and demand zones based off of reversal candles, but there's also the aspect of whole numbers, which you'll see time and time play significant roles in areas of support and resistance. If you're looking at a supply zone, like again here, say if this is like $8 and it looks like a great area to short because it just went parabolic, but this is 10 here. $10 is going to be a much higher probability zone where people are going to get short on, or it's finally going to reverse, right? Things, I call them magnets. Okay, this is a magnet. Typically, when I would say in the stock market, things would just magnet to the next whole number. And when you see something just that close to the whole number, it just gets drawn to it. And so you want to be very cautious of that. We'll see an example, a whole number play down here, of which I was actually short H bar Hedera hash graph. And we can see here on the chart, right, we saw a big reversal on the candle, pump up, and then another big reversal. And now we have the same opening and closing price here. So that is a level, but it's at 38 cents. So at 38, the next whole number is about 40 cents here. And you can see that's this zone right here. And just above that level, we have this supply zone here on that reversal candle. And so the extended range here is pretty freaking high. And then we have the other area at 50 cents, but it's quite a bit higher. When you're thinking, okay, maybe I should get short here, the potential for it to go up to 50 is also very high. So you need to be cautious about that, which is why you have to manage your risk and always use stops, because you don't want to start getting short under 40 and then have it rip to 50, which is going to be a much bigger loss than you want to sustain in your account. And you don't know if it is even going to stop out at 50. It might just keep fucking pumping up to 1. We never know what's going to happen, which is why it's so important to always use stops when you're trading these. But you can see what happened here. If we go down to the next chart, where exactly did it stop? It stopped right in that zone here, which wasn't exactly at 40. Like I said before, we're going to talk about here, typically there is the whole number, which it spiked out here, reversal candles, and then saw upper wicks and candle ranges that extended slightly over 40, faked everyone out, and then dropped, all the way back down to about 32 cents. So from 42 to 32, that's a significant percentage points move that you could potentially be locking in gains on that trade. So this is an example of looking at physical resistance areas, physical supply zones, and also combining it with, okay, there also is the 40 cent mark, probably not going to stop exactly at 40 cents, it's probably going to spike over 40 cents slightly and then reverse and then fake everybody out into a bull trap. And so when we look at the psychological supply zone numbers, here's just an example. Typically in the stock market, say if we saw a parabolic move, $5 maybe, between 7, 8, 9, those are going to be less significant. The next big one is $10. I did an illustration over here, what the kind of key levels to look out for. You should probably write this down. So anything under $10, $1 through $5 are significant whole number levels. And then $10, basically 5, 6, 7, 8, or 6, 7, 8, 9 aren't that significant. They can show areas of resistance, but all the way up to 10 is probably the next key level. Coins over $10, significant levels are going to be 10, 20, 30, 40, and 50. Coins over $50, more like, 100, 200, 300, right? So the higher you go, the bigger the whole number in intervals of 10 it's going to get, or intervals of even hundreds it's going to get. Over $100, 127 isn't going to be significant. Maybe 150 would be a lot more significant because it's, in an interval of 50, a little bit more even number where people might have a psychological barrier. When we look at it, typically, again, like I said, things don't just rip right into an exact number, right? Things are never perfect and never the same. So in the stock market, my kind of rule of thumb was the range was about 30 cents over the whole number, depending on what it is. It could be anything over the whole number, right? It might rip to 10.55 and then just absolutely get annihilated and dump, okay? But typically, what you need to know, it's going to spike into a range over that whole number, and there's going to be a psychological supply zone in that range that it spikes over that whole number, and typically, you don't want to short right underneath because it probably 90% of the time isn't going to stop underneath the whole number. It's going to spike over the number into a range somewhere in there we don't really necessarily know. If we have physical supply zones that we can draw over from a previous price action that was happening over here, right, that's definitely going to help, and we can combine those things together. But this is an area that we want to be watching for and combining our strategies of understanding supply and demand zones in addition to understanding the strategy of whole numbers. And if we come down here and look at some more examples, same thing that I drew here, let's just take a look at, so Solana. At $100, that was, potentially a significant area where it might reverse, okay? And we can see it did spike from where? $100, basically right up to 130, right? Like when I said between 10 to 30 cents or 0 to 30 cents, in this case, since it's 100, it's 0 to 30. So we're just taking those similar intervals and strategies and ideas and potentially putting them on a higher level of time frame. And we can see it did fake out and it looked like a potential reversal. If you did not know that all this was happening and you saw this candle right here, this big reversal candle, this looked like it was going to just dump and roll off $100 and it's absolutely shit. The problem was this was also what? An all-time high, which is also blue skies, right? Blue S. We don't know. It's extremely difficult and dangerous to try to short a blue sky all-time high parabolic move because we have no idea how it's going to go. And then from 100, it just ripped all the way up into the next psychological number, which is 200. And what did it do? It went from 200, spiked to about, let's say 215. It didn't even get up to 230 before finally seeing that massive, 50% drop on Solana. So this is just an example of one all-time high blue sky breakout, or it looks like maybe at 100. Nope. Once it broke that high, right, this would be the off fuck zone that we talked about. As soon as that happened, and that would be your stop level as well, this thing ripped all the way to 200, spiked over 200 to about 215 before finally seeing that reversal. So this is just an example of seeing the whole number strategy, psychological support and resistance play out. Same thing here. If you're looking at a breakout from 5, the next significant levels, yes, 6, 7, 8, 9, are going to have maybe some, but the primo area that we'd want to look for is shorting upwards in the $10 range because that's going to have a much bigger psychological supply. And if you have supply from previous price action over here, say if there's reversal or clusters back here that you can draw supply, that gives you more ammo to be like, okay, this is definitely going to be one, we have the psychological zone as well as the physical zone, and that would be a primo area for a reversal to try to capitalize short on. Looking down here at Sand, which was one that I made $20, $30, $40,000 on, I can't remember, I traded it twice. Just looking at what's happening here. Okay, so remember, well, I didn't mention anything about under $1, but under $1, it's similar to the 1 to 10, 1 to 5, 10 cents to 20 cents is significant, 30 cents a little less significant, but then 50 cents is definitely going to be significant. And then the next one would be $1, so 50 to $1, those are kind of two key levels, but also 10 to 20 is going to be significant as well because those are kind of key levels in addition. So we can see basically this thing bottoming out near that previous low on Sand. Also, level of 20 cents, a whole number there. And then reversing, once it flipped over the 9, 13, and 20 EMAs, just absolutely ripped. Where did it rip to? Right into a 50-cent level, which is going to be a psychological level, PSY. So this is psychological level zone of 50 cents right here. So definitely key level. And then if we can look over on the zones that were previously in place, we do have this order block here, right? We have the reversal candle here, lower zone, high zone, and we can see the price action spiked right into that zone. Basically, right, this would be an area that we could potentially be getting in, right? This would be maybe one area to short here, 2 and 3. Those are potentially 3 areas to short. The lower zone, middle zone, base range, and then the higher range. And then there's the off fuck zone, which is slightly above it here. We don't know what's going to happen, right? And it spiked right into that range before reversing, 20, 30%. And I was able to capitalize short on that. And then where did it find support? At the 9, 13, and 20 EMA before making another massive run up, okay? So we can see this coming down, then to seeing another massive spike. And we'll talk about this later about when to take profits and how significant the 9, 13, and 20 EMA is and how a lot of times we want to just see this thing absolutely eat shit, but then we never lock in any profits and it just rips right out that support zone and makes another massive run up into the next supply zone, which is exactly what it did here on the next supply zone. Here we have the reversal candle, also the same opening and closing price, open price, closing price, reversal candle that we talked about. Also the range here, upper range, lower range, but with the base range here, one, you can see that this level also played true on this reversal right here. We also have the same opening and closing price right here. So basically, in between this range right here and right here, this whole range right here would be a solid area to get short, right? Because we have basically multiple clusters in addition to this whole cluster back here. And what happened on this particular move, this thing ripped all the way up right into this level right here, into right the exact base range from this candle before seeing a massive dump all the way back down to 30 cents from 70 cents, 50% drop. I also made money short on this trade right here. So this is an example, one, the first round trade, of which went right into the whole number, also the previous supply zones, reversing right into the 9, 13, and 20. Secondary, bouncing right up the 9, 13, and 20. Huge fucking rip into potential zones, which is also 70 cents. Like I said, 70 cents is less significant than 50, but doesn't mean that 70, 80, 90 won't be key areas where people might start locking in profits, especially when it's combined with physical supply zones that we can clearly see and draw on the chart here, on this actual chart here. So that was kind of a picture perfect area and illustration of seeing this work out almost to the T on sand, of which I believe I have recordings of my actual trades on this later in the video. But anyways, guys, that's it for whole numbers. Understand that we want to combine these actual supply zones by looking at previous order blocks and reversal candles on the chart. And if we combine them with these psychological zones that we can understand, basically it's never, right into the whole number. There's that psychological zone that's going to spike over the whole number, try to fake everybody out, because a lot of people will put their stop, if it's $10, people put their stop at $10, okay? And then all of a sudden there's this massive spike right over $10, 20 to 40 cents above, and then it's an absolute annihilation where all the people that got stopped out are now freaking out, and then smart short sellers got in up here, especially if there's a supply zone here that we can drag over. And combined with whole numbers, that's a winning strategy to get short.
Welcome to the dark side.
All right, guys, next part, we're just going to talk about the simple understanding of understanding short-term trends when we know that it's in a bullish trend and when we know that it's in a bearish trend, and also when those potential reversals might be coming. You probably have a deep understanding of the 9, 13, and 20 EMA because I've talked about it vastly on all my YouTube channels and especially in the Krypton course. So essentially, in a bull trend, a dip to the 9, 13, and 20 is an area where you're going to want to buy the dip if you're long, or if you're short, you might want to be locking in profits because there are going to be a shitload of people buying the dip and things might just, see a massive fucking boost off that zone and you want to lock in some gains. But if things break down the 9, 13, and 20 EMA, this is definitely an area where things might just get absolutely crushed and you might want to stop out and sell. Not necessarily going short because you're already going to see a, potential big reversal, and then it's going to maybe go like here and then maybe see a big boom. But say if you got short up here, lock in some gains right here, and then maybe hold partial and then put your stop up here and then hold to see if it does see that next big move, because this is where you're going to see a massive dump. But a lot of us get greedy and only go for this and never lock any gains here, and then things fucking spike, just like we saw on the sand trade here. It's like, okay, short over under 50, right into the 9, 13, 20. Okay, but what if this reverses and it just gets absolutely annihilated and goes back down to 20 cents? Wrong. Nope. Right off the 9, 13, and 20 zone and just absolutely crushed it up to 70 cents. You would have stopped out. You would have been on a massive loss before actually coming back down here. So that's kind of just the deep understanding of what that short-term trend looks like. And then a bear trend, if things rip to the 9, 13, and 20 EMA, this might be an area to potentially get short because it's in a bearish trend. But if it breaks out over the 9, 13, and 20 EMAs, that would be called a trend reversal, and you might want to stop out. So let's just take a look at Bitcoin here. And just for an example, coming in here, once this thing was below the 9, 13, and 20, also broke down the 50-day moving average, clearly a short-term bearish trend. Right here, this thing tried to break out over here, fake out, still under the 9, 13, and 20, a little bit over, and then finally had a confirmed decent closing price over it here, as well as over the 50-day moving average. And that was kind of the official reversal on Bitcoin. And now what happened, right? We can see spike up, come back down in the 9, 13, and 20. People might be thinking, oh, this is reversal. It's going to just get annihilated and keep dropping. No, people bought the dip. What happened again here? People bought the dip, people bought the dip, people bought the dip, and then finally reversed right here. And on this side, now it's bearish, but it did spike slightly over, of which again, nothing is perfect. You're going to see a lot of different fake outs all the time. It's very difficult to look at these things and be like, this is a definitive trend indicator. Things are going to be all over the place, but it gives us at least a generalized idea of what the current trend is. So it did spike out over it, but then had an actual fake out and then get absolutely clobbered. And then finally a confirmed breakout above it. The trend reversed, and now things are bullish. Now people are going to start buying the dip again on the 13, 9, and 20. Of this case, only to the 9, never even went back below it. And officially, once these things broke down, that was the breakdown. And now the trend is now bearish. And now things are spiking into the 9, 13, and 20. People could get short, and then this thing just got absolutely annihilated here down into the next supply zone here. So that's just a simple understanding of the 9, 13, and 20 EMAs. You know, when things are under it, people are going to be selling when it taps back into it. When price action is above it, people are going to be buying back into it. But once those things in the trend actually reverses, that's when it's like, okay, this isn't looking good. The short-term trend is now flipped over and things could start reversing. And also there's the combination of which we've talked about previously. The 50-day moving average is a very, very significant indicator of the short-term trends. Another thing, especially if you're short and also potentially to not go long anything, right? When we're in these bearish reversals, this is a very, very dangerous place to fuck around trying to trade the Krypton system, because if it's in a bearish trend, trying to trade breakouts, you're going to get your ass fucking kicked over and over again. I lost a shitload of money trying to buy the dip, trade fake outs throughout this entire period because I didn't have enough patience. And what I've started noticing going forward is that always wait until you see a wedge pattern breakout, because that's when you kind of get the confirmed reversal. That's when you're going to see a lot of patterns start breaking out and actually see confirmed follow-throughs, right? Because when we try to buy a breakout, we're not just looking for a quick little spike and we sell out. We want to see a confirmed follow-through and see multiple days of this thing just absolutely ripping and going fucking parabolic. And if Bitcoin is under the 15 or the 13, 9, and 20 EMAs, breakouts aren't going to see consistent sustained moves because Bitcoin is going to continue to eat shit and nothing is going to work. And I said this in my Telegram group just the other day because Bitcoin was looking like shit. We're below the 9, 13, and 20 EMAs. And I said, Bitcoin's still in its descending wedge. As we have seen, when this happened every time so far, no pattern or long positions for the majority will do what you want until we break out above the wedge. Your long positions will continue to bleed until this happens and we could continue to go lower. And I said, lower we go indeed, because we saw a massive liquidation candle on Bitcoin right after that. But you can see me drawing my supply zones, or actually demand zones here, which was at this candle here and also this cluster over here, which we can now translate that over to the chart. This cluster zone here, which is also just shy of 50K, and then also this cluster zone down here, which was where we saw the actual low of it going through. Okay, and so now we're in this descending wedge. And until this wedge breaks out to the upside, longs are going to get absolutely crushed. There's obviously going to be some dip buying opportunities at these supply zones for sure. But until we actually see a reverse in the trend, until we're above the 9, 13, 20, until we break out of this wedge pattern, ain't shit gonna happen for the longs. Everyone's gonna get crushed until that actually happens. If you are short, right? I don't get confident in my longs, or if you're wanting to get a short. And if you are short, if you see a wedge pattern breakout like this, you lock in your gains significantly, because you could potentially see a massive squeeze to the upside. Because when we do see these fucking things absolutely get ripped to the upside, I got my ass fucking kicked going short. If you haven't watched my YouTube video about me turning 20K into 1.7 million, I got overzealous going short and didn't have my stops in place. I'll link that video down below, and you'll see me get absolutely crushed on this day because I didn't have a stop in place. Bitcoin pumped over 4,000 points in under 5 minutes, and I instantly lost $50,000, and that just did not work out well for me. So if you see these patterns break out, now the problem is that I was first getting short because we saw this one pattern right here. I got short. And then now we're in this descending wedge, and I'm hoping to see another bounce off this level here and another push down to the next supply zone, or demand zone, which was 30K. And we saw this same exact pattern form up here, break down the 50 moving average, come back up, retest the wedge pattern here, which is actually a little more right here. Once that wedge pattern failed again, we just saw an absolutely massive dump at that level. So this move that I saw right here on Bitcoin was the exact move I was looking for right here. But instead, that's why it's difficult to short, because the areas that are going to turn into a breakout and things might explode are also the areas where you want to get short, but you have to have stops in place. I didn't have a stop in place. I was literally checking my phone every 5 minutes while I was watching a movie with my girlfriend. I didn't check my phone for a span of 5 minutes. Bitcoin spiked 4,000 points in under 5 minutes, and I was instantly down $50,000. Always use stops, put them in place, or you need to be watching it every second, because even if I was watching it, I wouldn't have had time without having a stop in place to avoid that situation. But the exact move that I was hoping for right here didn't happen. I didn't have my stop in place, and I got absolutely fucking crushed. And then this time around, rather than getting short, my mindset was a little fucked from this whole situation right here. Like, I hadn't been shorting throughout this whole period because I got my ass kicked right here, but I just made, maybe 500 grand in the metaverse trading Krypton patterns. And then this time around, rather than getting short and making a bunch of money, I basically just locked in a bunch of profits because I identified the trend reversal. So I didn't get too aggressive here going short because I had a little mentally damaged from this run right here and this fluke of a trade where I didn't have a stop. 4,000 points in 5 minutes and lost 50 grand. And so this time around, my confidence was a little bit low to go short. right? Even though the pattern was here and I knew that this was definitely potential, I just didn't have the confidence. So rather than trying to make money short, I just locked in more profits and got rid of most of my longs in my day trading account. I'm still have my HODL account, but I identified this as a potential reversal. I didn't know this was going to happen, but that would be a significant move to watch. The same exact pattern I was going to look for here short. Again, sometimes when you go through these experiences, right, you might not be scared of dogs, but one day a dog fucking bites you, then the next dog comes around, you're gonna be scared of that dog. Some of these times, this psychological aspect of getting damaged on some patterns that sometimes work, but sometimes they don't, and you don't manage the risk correctly, of which sometimes I don't as well. I make mistakes all the fucking time, or I get lazy. Like, I'm watching a movie and don't feel like setting the stop. It's gonna take 20 more seconds to set a stop, but I'm lazy right now. It fucking sucks. And so me being mentally damaged, I didn't take advantage of this, even though I knew the pattern was there. And I said it in my group, like, listen, guys, if we roll off this bottom, it could go either way. It could either spike to the upside, retest, and we fucking rip. But if it doesn't and this fails, we're going to see a big slap. I wasn't expecting a huge liquidation candle like this, but we did see that. So I didn't take advantage of that short, took a bunch of profits on my longs because I knew that this potentially could be happening. I didn't want to succumb to that risk of that happening. So right now, as far as going long, buying the dip into these demand zones could be profitable, but there's not going to be any Krypton patterns until we break out above this wedge pattern and actually see something form up, of which the last time that we saw a big day like this from massive sell-off, right? I said from the last time I called the top, and this was just a disaster for people trying to trade any sort of breakout pattern. It took 98 days for things to recover and actually form up a wedge pattern and actually break out and actually see Krypton patterns form up again. It's hard to say what's going to happen now, but the bulk of the move has already happened. But we could definitely come back down and see this zone or even down to 30. We don't really know yet. All I know is that until a wedge pattern is breaked out to the upside, longs are fucked. Buying into extreme dips could be profitable, but big spikes into resistance zones could also be profitable going short. So that's what we'll be looking for.
Welcome to the dark side.
All right, guys, next topic of discussion is using multiple time frames. When we look at lower time frames, other than just the daily chart, the less significant the signal, but the earlier sign of the signal, right? So if we're looking at a daily chart for a reversal, such as we want to see Bitcoin, a reversal or a breakdown of the 13, 9, and 20-day moving averages on the daily chart, is going to be a much more significant move than us, say, looking at the 15-minute chart where it breaks down above and below these things multiple times every day. We want to be able to combine both the intraday chart as well as the daily chart together, because one, basically what we're trying to do here is come up with a trading plan or theory based on a longer term time frame such as the daily, and then use the intraday charts such as the 15, 30-minute, 1 hour, and 4 hour to make sniper entries, right? Because we want to have pinpoint entries. And when you're looking at a daily candle, obviously at the start of the day, it can start up here, but at the end of the day, it can have massive moves up and down where, you know, if it just is a brand new candle, we have no idea what's going to happen that day, just looking at the daily chart, because each one of these candles has all this price action in it where it's just all over the fucking place intraday, which is why it's important that we understand how to implement an idea based on the daily chart for a bigger move that we're trying to go for, and then look at the intraday chart to try to better gauge the best entry going forward with that, right? So typically what I'm looking at when I'm trading is the 15-minute chart plus a daily, the 30-minute chart plus a daily, the 1 hour chart plus a daily, and the 4 hour chart plus a daily, right? And that just basically gives me different time frames for looking at different, you know, gauges of, okay, how significant of this is this move, right? A breakout on a 15-minute chart is not going to be nearly as significant as a breakout on a daily chart. In addition, what we're going to try to do is use the Iconic FX or Krypton Fear and Greed indicator. Basically just gives us an idea of when things are overbought and when things are oversold. Basically, this is massive greed up here where people are just buying in, things are going parabolic nonstop, people are getting greedy, and when things are in the greed area, there's probably a reversal coming. You just don't know when, like, right? We started going into the greed area when Bitcoin is at 49, but it stayed up there for a long time until it went all the way up as high as 66K and then as high as almost 70K, but did have a little bit of a dip below, but now down here, right? So it's definitely not perfect, but it gives you a sense of, okay, things are on a rip, on a tear, people are getting greedy and things just don't stop. And so typically what I try to do is not necessarily use this as a definitive guide to getting long or getting short, but it just gives me a general sense of, you know, where things are at in the market as far as sentiment. But if it is completely overbought, your short is probably going to perform better. Or if it's completely oversold, your buy and a dip is probably going to do better. Okay. And basically the goal that we're trying to do here is one, go back to just using our supply and demand zones and or whole number zones to get short. And then what I like to do is look at the intraday chart and try to pinpoint a sniper entry. what I said here is never short when the Iconic FX, or I just changed it to Krypton, fear and greed indicator is overbought on the 15 and 30 minute time frames. Okay, so the key strategy here is to find a short setup on the daily chart for the idea, then wait for the Iconic FX, Krypton, updating as we go, fear and greed indicator to be overbought on the 1 hour, 30 minute, or 15 minute time frame for your entry point. You can also set alerts on TradingView for when price action gets overbought on intraday. So let's just take a look at an example of what that might look like. Say, even though I don't want to short Bitcoin right here, but say you wanted to short Bitcoin up here. Say if like right now, Bitcoin was down here, but we wanted to short Bitcoin if we got back up into, the 9, 20, and 13 EMAs right here, okay? So daily chart, even though this is oversold on this area, we're now in that bearish trend, which we are wanting to, draw this out, and we don't want to get long until these things break out above here. As long as we're in a descending wedge and below the 9, 13, and 20 EMAs, things are going to completely get annihilated until we break out above that, and retest of the 9, 13, and 20 EMA are areas to potentially get short before we see the next leg down. So typically what you would want to do here, say we are wanting to get short in this range, which is about right here, right? We wouldn't want to get short anytime we're down below here, right? Because what happens when price action is down here on an intraday chart, things spike back up quite largely. So when we're looking at an intraday shorter time frame, is this not an optimal area to get short? Because look what happened. Every time it was down in that range on the Iconic FX fear and greed indicator, when it was down here on the 30-minute chart, right? What happened? It spiked up. When it was down here again, it was oversold, spiked right back up. Down here again, what happened? Not a massive spike, but it then eventually rolled off the top and then spiked back up. So if we could just look at that daily chart and be like, okay, we're in this resistance zone. This is likely a higher probability area where things are going to roll off and go short. So rather than just like being like, fuck it, I'm just going to go short, we can look at the intraday chart and say, okay, I only want to get short once things get back into this overbought and people are being greedy territory, because this gives us a much better entry. Because if you get short down here, and you're like, okay, things are breaking down here, and then all of a sudden things are spiking back up. At this point, you're thinking, fuck, we just broke out above those highs. We're maybe breaking out above this trend line here, and things might just reverse. And you might actually stop out here because you got short down here. Like, we don't want to do that. You don't want to be shorting on an intraday chart, 30, 15, or 1 hour, right? If we look at the 1 hour here, you can see it was down here, but we don't want to get short up here. I mean, we don't want to get short here. We don't want to get short here. We don't want to get short here. We want to get short when we're over the fear and greed indicator up here, right? So 30 is probably one of the best indicators for this because it's going to be the most volatile and have the most signals for you. But you can see how difficult this would have been if you were short because things were all over the place. But you can see how much better your entry points would have been by waiting for price action to get over this price on the fear and greed indicator to wait for this zone. So say you don't want to wait for that to happen and sit there on your computer for many hours waiting for that to happen. All you have to do is what I do is grab the horizontal ray tool and say price action was currently right here. And say you were like, I don't want to short the breakdown because we're oversold right here and we're in the fear index, which is typically an area where people might buy the dip. Now, I want to wait until we're back above this level because I do like the daily chart looking like we're going to potentially rip off this level. So what you can do is just get that horizontal ray tool, put it right above this level or even just below it so you have a little bit of forewarning. Now you have this indicator where if we look back, now it's like, okay, right now price is here. I want to wait until this gets over that line and then I'll get an alert to my phone or on my computer. And then I can look at it and be like, okay, this is a much better sniper entry point to get short based on my theory of this is going to roll off this zone, but I'm going to wait for the intraday chart to get into a better position for me to get short. So as soon as that rolls over the IKNK FX fear indicator, right, you can click this and click this button here, which is add alert. And then you can say whatever you want, like time to prepare to short BTC. And so then whenever price gets over that and that line breaches, you're going to alert to your phone. You're going to get an alert that pops up on your screen. And then you're going to be like, okay, now we're in this zone where we're in this greedy territory where things are now overbought and more greedy on the intraday chart, but we're still looking good on the daily chart for my theory. And that would be a much better entry to get in when price is over that level on the 30-minute chart than to try to short a breakdown down here, which is you're playing with the risk of potentially getting in down here. And then you're all of a sudden getting squeezed on your short. And now rather than being like, oh, time to add, you're maybe even thinking about getting stopped out up here because you're at a massive loss now, okay? So that's the general rule of thumb that I try to live by when I go short is identify the pattern that I'm looking for, whether I'm shorting off a resistance level or I'm waiting for the daily candle to get into a resistance level, whether you're trying to short this breakdown up here, whatever it is, identify the pattern on the daily chart and then I use the intraday chart and I wait for it to be in a greedy and overbought territory between the 15, 30 minute and 1 hour charts. So never short when the Krypton Fear and Greed indicator is oversold on the intraday chart, whether it be 15, 30 minute, you can even say 1 hour chart here also, right? Because you're just asking for trouble. Oversold is not a good time, not a good time to short, not a good time to short. Anytime it's down there on an intraday chart, it's likely going to see some sort of squeeze to the upside. So anyways, that's what I look at when I'm looking at the daily and intraday charts and looking for short positions.
Welcome to the dark side.
All right, guys, next little quick brief thing that I want to talk about is bull traps, because bull traps are something that people who are going long get caught in all the time. So these are multiple signals. One, there's signals that potentially if you were long, then maybe you should get out of this position because there could be a massive reversal coming and lock in profits or stop out of your position. Or this could be a situation where you might want to get short because everyone who's long is going to start panicking and start selling. So there's multiple different formations that come with a bull trap. A bull trap is essentially when there's some sort of breakout over a previous high. Maybe there's a previous high somewhere, and then bulls come in, spike over it, but everyone now thinks that, oh, this is super bullish. We're going to the freaking moon. Everyone's happy. Everyone's making money. But no, sellers come in, fails that breakout over that previous high. Things just absolutely eat shit, and everybody freaks out, and all the bulls start panicking and selling. If you were potentially able to get short up here, which a lot of times this is the off fuck zone that we talked about previously. We don't technically know if this follow through is going to actually happen and the breakout occurs, but if it doesn't occur and it turns into a bull trap or bulls get trapped thinking this is a big breakout, that's when there's a lot of panic coming in and starts breaking down. So different formations of how that looks is one, there might be a breakout formation such as a Krypton pattern that fails to break out, which looks like it's a nice breakout, and then boom, gets dropped back under that breakout zone, which typically leads to me stopping out of my position for the time being of that occurring until it shapes up again and potentially breaks out. Another one is a parabolic move that looks like, potentially there was a supply zone from previous action coming in here. Supply zone, we have a candle that looks like a supply zone comes in, revival pattern breakout, right? And we're looking like we're going to spike into this zone and potentially just reverse. But a lot of times it'll just have a direct spike into that zone and then top out right around a supply zone and be like, okay, this is the reversal part. Things are looking good. Perfect shorting opportunity. I'm going to get short. And there's one last freaking spike where everyone thinks this is the top. Nope. There's actually one more spike that stops everybody out. Even shorts buy to cover here and get stopped out. People who are long buy here, buy this breakout because they think, oh, this is the next leg up or going up. But then all of a sudden, wham, everyone gets faked out. Everyone who was short right here got squeezed. People start buying this breakout, but then a lot of sellers come in, and that turns into what? Another bull trap. And this can also happen if you're short where you stop out right here because you got short right here on this first round, and then you're thinking, okay, well, I need to stop out because maybe this is the next run up, and then wham. And this happens a lot. This is an easy way to get stopped out on shorting when you're shorting in a supply zone where you get in the first time it tests that level and it comes back and retests that once again, and you might stop out, and then it either A, you're happy because it just absolutely spikes to the upside, or B, it's another bull trap here. You get squeezed out and then it annihilates, and then you're fucking pissed off because you got stopped out as it came back down. So this is why it's not easy to short. This kind of shit happens all the time. I've been stopped out on what I call the one last spike many, many times because you think this is the one last spike here. Nope, there's one more left, and that's when you get stopped out before things come back down. And it might have just went slightly over that supply zone enough to potentially, stop you out. And again, nothing is perfect. This shit is completely imperfect, right? If this was like giving us a bunch of perfect signals, trading would be easy, but signals are never perfect. All we can do is take it in a nutshell, understanding zones, and understand that these zones are going to be price action is going to be all over the place in those zones, and we don't know what's going to happen. It's going to be very difficult and emotional and high stress. Other ones are just blow off tops. Typically when we see a parabolic move, if you're trying to, short Solana as it's ripping from 100 to 200, and all of a sudden it starts slowing down at like say this is like 190 down here, but price action starts slowing down. Things never typically reverse after like a slowdown movement, right? It's not like, oh, things are just slowing down here and then bam, it's easy to short. I'll just short in this range and then it's just going to roll off and I'm going to be good. No, typically what happens in a reversal is there's some sort of blow off top which is when a reversal on the other side buying the dip. It's called capitulation. I don't know how to say the freaking word, but typically that happens again when things are shorting, right? It's never really just a slow rollover and then slam. There's typically one last major spike where a bunch of people who are short maybe get squeezed to the top, to the upside, or there's maybe a breakout here or a breakout to an all-time high. A bunch of new buyers come in because they're freaking sheep trying to buy the top for whatever reason. I don't know. They just got FOMO. And then wham, there's that massive sell-off and things get, annihilated to the downside. So it's difficult to time things because the reversals don't just happen in a slow pace. Reversals usually happen around high volatility in a supply zone or at a whole number or just on a parabolic move into blue sky territory, right? So that's why shorting is difficult because there's a lot of volatility happening and easy to get stopped out and scared in these situations. Other situations are like a double top. When things come in, say there was a reversal candle right here. And so we're thinking, okay, here is the zone where we want to get short in this coin, but the top is here and we don't necessarily want to get stopped out and see it spike out. A lot of times, again, there's going to be the off fuck zone, AFZ, F is an F, where things are just over that zone, right? And we don't know if it's going to absolutely crush and keep going or it's going to turn into a bull trap and then break down below that level and then just absolutely get annihilated down to the downside. So this is very difficult when it comes to trading because reversals don't happen in a calm, cool, and collect manner. Reversals happen with one last spikes, bull traps, blow off tops, and double tops around a lot of volatility in these zones, which is why it's very difficult to short because there's a lot of volatility. Things are going up, and you're like, okay, this is it. Things are going to break out above. I need to stop out. Oh no, they're selling. It's absolutely crazy. So just taking a look at an example of a lot of these, right? When Bitcoin reverses, it doesn't just slowly reverse. It's just pumping and then all of a sudden dumping. One last massive, bullish candle. Everyone thinks, oh man, we're breaking out all-time highs. Bullish candle. Nope. Reverse. Okay. Breaking out all-time highs. Huge bullish candle. Reverse. Okay. So this was a bull trap. People thinking that this is going to break out all-time highs and keep going. Now we're going to 100K. As soon as that broke down and failed that breakout, massive dip to the downside, 21%, come back up into the 50 and 13 EMAs, then another 51% from here. Okay. And then after the dust settled, came back up, broke out above these all-time highs again. Wrong. Bull trap, massive parabolic move into resistance zone. Bull trap, which is also a double top here that we just talked about right here. Bitcoin, bull trap, straight into a negative 12%, came back up again, right? Retested, broke out over that high, was then led to another bull trap after that failed. These previous all-time highs, massive bull trap here, and everybody's getting absolutely fucking annihilated here. Now down as low as 41% from the top. Okay, so these are called bull traps. They're extremely bearish signals, but a lot of times they're difficult to get into because sometimes when we break out an all-time high, we don't know if it's breaking out all-time high and then gonna just get a pump and can completely rip, right? A lot of times we don't know, which is why it's important that we combine all the things that we understand about price action, whether it be previous supply zones or whole number theory, so that we can better understand what's going on. And then looking at this and be like, okay, right, guys, and I mentioned this multiple times, be like, guys, we got a double bull trap here. This is dangerous. Lock in profits. Things could definitely, I didn't know if this was going to happen, but you have to prepare for this, okay? If you don't prepare for this, you can get completely annihilated by these massive dips to the downside. And it's a lot better if you start locking in profits here and then potentially look at short positions to get short here. And then also, if you did lock in a bunch of profits here, you now have a bunch of free cash to then buy the dips because there is going to be a massive pump at some point where the actual dip stops and then a lot of people start buying the dip and we start ripping again, okay? So it's extremely important to understand just a lot of these different variables that can happen in chart, but that's basically, what you need to know about bull traps. They're a very, very potent, scary, hard to predict, but very powerful move.